Welcome to TradersArmy.com, defending your right to build wealth and preserve capital for generations to come. What up, everybody? Friday morning. Welcome to today's edition of the Daily Market Commentary. I'm your host, Chuck Fulkerson. Hope everybody had an amazing trading day yesterday, as we are going to do what we do each and every day, looking at the futures markets from an educational perspective to find 10 to 12 opportunities that seem to make sense. If you're new to the channel, do me a favor, click the subscribe button, hit the notification bell so that you get the alerts as they happen. If you're not new to the channel, do me a favor, click the like button. It's all it takes, just a little thumbs up. Just real quick, just hit it. Okay, thanks. Good. Glad you did that. All right, let's dive in. S&P today. We're up 26 points this morning. We are seeing some market movement early in the day. Yesterday, we had a live trade room. And in yesterday's live trade room, my word of the day was very simple: caution. There was no reason to really jump in and take anything that just seemed out of character. And that's kind of what happened yesterday in the S&P. While it was tempting to get in on some of these moves, the problem is that we had a lot of chop yesterday after the prior day's big sell-off. Now, gaining a little bit of momentum in the overnights as we're coming into what could act as a supply level. Now, yesterday we talked about this particular supply level in our live trade room, and specifically when we were looking at it was about this time of day. And I was very willing to take a short if we moved into here quickly. However, notice what we've been doing for the last few hours. What does that do to the level? Right? What does that do to the level? That is the kiss of death to a level, is basing in front of the level. Because what it does is it tells me that my opposing fair price value area is very close to my entry, which now means that I'm essentially sitting at a 1-to-1 reward to risk. It just doesn't make any sense. So what I'm going to do with this one now, because it's in the context of a bigger picture downward move, I think that it could still hold. So that's really where the rub comes in, is how do I trade it if I think it can still work, but I've got basing in front of the level. This is where you can do the confirmation style entry. Right? Set yourself up for a confirmation style entry, allow price to come into there and then come out. Now, if you really feel that the short is the way to go, you can still take a limit entry. Just understand the risk that you take in that kind of a position. Now, NASDAQ looks very similar, coming into a very similar level. The NASDAQ level is not as clean as the S&P level. I like the S&P level actually a bit better. If we bust through there, then certainly the origin of the move would be all the way up here for a potential reversal, right? We look to the origin of the move as an opportunity. I am also going to take a look at yesterday's market close, because yesterday, right after the close, we had a little bit of basing before a decent move up. This could give you also an opportunity to get back in if we do pull back into this region. Crude oil. So yesterday we had a really nice crude oil trade, the hourly level right here. Got a good 3-to-1 move out of there, and we had actually taken that stop and moved it down, brought in a really nice profit as it hit both target 1 and target 2. Notice the second time we came into the level, we traded all the way to the top of the level, and then the third time we blew through. Very standard operating procedure for a quality level, right? It just shows us that those levels are being eaten up, and now we came through there, getting a little bit of a sell-off. Our next level is this wick over wick area here below this pivot high. So keep an eye on this level later for later today. Gold. Now, gold, unfortunately, I felt like we had a really nice opportunity for a breakout. 1, 2, 3, 4, 5. After 6 candles, what had gold done? Nothing. So we got the breakout in gold, but our 6 candle rule tells us we got nothing. Time to close this thing out. So you should have closed this out at break even. At worst, a break-even trade, because it certainly didn't come below the stop loss before 6 candles and giving you the opportunity to exit the position. See, now what that does is it sets up and says, all right, well, are we going to get another reversal? So I think this is a good opportunity I like this area up here for a reversal. This little area here. Now you can use just the wick over wick area if you want. Your stop would still be above here. this region up in there. But that, to me, is the best opportunity for a reversal. Possibly even could look for a candle to candle. But remember, it's in the context of a lot of chop. So it's always going to be slightly lower probability. Looking to our bonds and currency markets. Yesterday, we had looked at our bonds and currency markets for different opportunities. Inside of the ZN, we got a little touch and go off of our hourly level. So a really nice move off that hourly level. Let me know if you were able to take that position. Leave that in the comments below if you're able to catch that bond level. That one worked out really well. Fairly strong move off of there. If you did take it, take your stop and move it down to above this pivot here to lock in some profits. The Aussie level, we are still chopping below our breakout to the upside. Definitely putting in a bit of a base, though. If I look at the 4-hour, we're seeing a bit of a base being built. It's a little bit of a triangle pattern, not quite a triangle pattern. I guess it would be more of a little bit of a falling wedge, but it's definitely basing, right? Definitely different than this move. So I think there's a chance that if we base above here, we may get a breakout to the upside. Speaking of breakouts, the euro, we got another breakout in the euro. So in yesterday's live trade room, we talked about the opportunity for a breakdown below this area here. We did indeed get that breakdown just a bit later, and now prices are continuing to run. So leave me in the comment below if you were able to catch that breakdown. If you missed it, look up here for the reversal. I think that's the next opportune reversal. I'm going to actually wrap 2 lines around both of those areas. Canadian dollar, unfortunately, we came into the 15-minute level, and what happened just before the 15-minute level, we got a little bit of basing. And as I say, if I said it once, I've said it 1,000 times. Basing is the kiss of death before a level. Now, on a 15-minute chart, which is the entry time frame on here, the basing is not as prevalent, right? So it's not as prevalent on the 15-minute chart, but once you get into the level, it's just kind of chopped around, and technically your stop would be, well, probably above here. You could theoretically put it above this pivot, but above this pivot is okay. And this is a small stop out position. So obviously those are going to happen. We're going to take those. C'est la vie. That is life. And you got to move on, right? Move away from the next opportunity, because that's what we're looking for. I think that the next leg down, I think, is really going to be a downward move, and I would look to a candle-to-candle 4-hour position as an opportunity. Great British Pound, Japanese Yen, just kind of highlighting those two real quick. In the pound, we have really gone sideways. We've really just stagnated and gone sideways. Had a little breakdown candidate in here, didn't come back and retest it. With the overnight rally in the pound, you could get another shot at it right in here. And then the Japanese Yen, I just... Not a lot to add to the yen. Still sideways price. There's a little bit of a potential level here, but it's super tiny. And those super tiny levels are a little bit higher risk, but an area that you can look at. So those are our levels heading into this weekend. Hopefully you're able to catch some of those breakouts. Those ones were very effective breakouts, especially the euro trade. The crude oil hourly level was a really strong one. And then little losses like the Canadian dollar certainly shouldn't hurt you all that bad. But remember, if you're holding a position over the weekend, hedge it. How do you hedge it? Leave a comment below. Put in the comment section down below. How do you protect yourself over the weekend when there are potentials for futures gaps? That's all I have for today. I hope you guys have an amazing day. I will be back Sunday evening for our live trade room. We'll see you soon. Later.